Good morning, one and all, and welcome to this morning's video. So this morning I have just the one pair on watch, and that is Sugar USD. The other pairs that I was looking for entries from, the price action has just either sold off without providing an entry, or it's just been invalidated by erratic price action, which is, in my experience, pretty much all that's been happening for about a year and a half now. So, as I said, we can't decide what the market does or what it doesn't do, but one thing I've noticed is that during the London session, a lot of what I'm looking for, almost all, about 90% of my entries seem to shape up during the Asian session, and during the London session in particular, and the New York session, things just seem to be invalidated by just whipsaw and usually news-based volatility. But so that's something I'm considering. I am considering moving to trading the Asian session at some point, but that would mean that I have to sleep all day and be awake during the night, and I've done that many years ago, and it really isn't good for your psychology, which is, in my experience, the most important part of trading. So that would probably be a trade-off which might be detrimental to me unless I decided to move to Asia, for example. And yeah, so that's what I was going to say is a swing style. I may start considering moving to more of a swing style way of trading, just so that I'm just not able to get entries just because of all the whipsaw that takes place all the time. You'd stand more chance of getting an entry and actually more chance of staying in the trade, even though the profit potential would be smaller. But anyway, that's something I'm just factoring in and thinking about. But regardless, Sugar USD we have on the higher time frames. So we zoom out. If we look at the weekly chart, I mentioned this in yesterday's video. The things that stand out to me straight away is the fact that we have this high here, okay, which kind of near misses to this high and this high, okay. So when that happens, usually we gravitate back to that area. And since I've got a bit more time this morning, I'll just touch on one or two things which stand out to me as well. So we have this high here, which near misses to this high and this high. We come down, and how do we come down? We come down in the form of this kind of reversal structure here, okay. So we have this, okay, we have the 1, 2, 3 middle section, okay. Sugar seems to respond very well to structure. So you can see reversal structure, 1, 2, 3. If we do all of this on the fly, what do we have? We have this area of this standout area of liquidity, which caused a big rally last time around. What happens? We have the 1, 2, we hit the area, but we don't break below it. And I've said on the higher time frames, usually we break below if we're going to rally to the upside. And the clue was how we moved away. We moved up in a series, in an impulse, and we get that we get that impulse correction continuation. But look how wide the correction was relative to the move up. When the correction is this wide relative to the move up, usually that just becomes that, which therefore already, if I'd have seen this at the time, I wasn't actually trading when this was forming. I started trading about here, okay. But knowing what I know now, if I'd have seen this, I would have automatically, like at the time, knowing what I know now, I would have thought, okay, well that's likely going to do that to give us this 1, 2, 3, which taps into there to push down to give us that 1, 2, 3, which breaks below a standout area of liquidity, which is likely where we'll get a rally to the upside. And that's exactly what happened. Okay, so these patterns are human psychology, human behavior repeating themselves over and over again. So we don't need that on the chart because it's not relevant. And one of the things about the way that we trade, the Falcon strategy, is that we keep it simple. Okay, the reason I'm able to read price action so easily like that, and trading is definitely not easy, don't get me wrong, but reading price action, especially when it's this clear, is easy for me. Okay, and that's because I haven't got a load of shit on my chart, excuse my French. Okay, so you don't need all this clutter that the brokers give you on your chart. Okay, why do you think? I've thought about this in the past, right? I used to bet on horses semi-professionally, and I made quite a bit of money actually. But the bookmakers didn't give me tools to help me beat the bookmaker. Okay, that would have, from a business perspective, I'm a businessman, that would have raised alarm bells. I would have thought to myself, why are they giving me tools to help me beat them, to help me take money from them? So why do you think the brokers, okay, this is trading view, but why do you think your brokers are giving you tools to help you beat it? It's because they know they don't work, or not that they don't work, they know that people will misuse them, or that, they're just not, they just don't provide clarity. They'll cause you more confusion than they actually give clarity, okay? So that's why they give you the tools, okay? They're there to make money. They're a business. They're not there to help you take money from them. Okay, so we have the near miss to that high and that high. We have these two highs, which I've talked about previously. So we have this one here, and I'm looking at a few things. I'm looking at, was volume triggered or was it built? Okay, so in this instance, volume was triggered. Okay, it sold off. I'm then looking at how did it respond to the low. Okay, and it correctively broke it. Okay, so yes, this could be an area of value because it's sharp, because it was triggered. Okay, the sharpness often dictates how valuable they are, but it didn't find, when it got to this low, it correctively broke through it, suggesting there's not as much here as we may have thought, we may think, and that this may be the more attractive area of value. And the reason being is because, one, volume was built here. Okay, we had a very big sell-off, and we didn't just have a very big sell-off, we had a very big sell-off which broke through a previous low. That tells me there must have been, because you see this low here, right? It was a sharp move down followed by a sharp move up. That likely means there's a lot of liquidity here, especially given how aggressively price moved up. So for price to build volume here and enough volume to break through this low without even respecting it, that by definition tells me that there must be a lot of volume up here. Okay, so these are things that I'm factoring into my when I'm breaking down my pairs, and when I'm putting them on watch at the weekend, when I'm deciding which pairs that I should have in my watch list, because I'm not looking at all 28. I'm looking at, this week I'm looking at 12. Okay, so I'm just going to flick to that. So last week's watch list, that's something else. These are the pairs that I'm focusing on. I'm not focusing on all of them because, as I said, we want clarity. It's not having a million pairs on watch which is going to make you the most money. It's having clarity. Okay, so this becomes the area of value for me. Okay, excuse me. So we do tap into that area, and we do get that sell-off, but the sell-off is corrective. Okay, so we have an impulsive move up. That is typical. If we are going to sell off long term, that is typical, because we do tend to see, after these somewhat corrective moves up, the last leg does tend to have momentum. One thing that, just to touch on it on the fly, one thing it doesn't have is it doesn't have a 1, 2, 3. So that makes this less likely to sell off. These are just confluence factors. But the other thing is, look how we've sold off here. A series of low momentum corrective candles, okay, a sharp pullback. Both of these things tell me that price is likely to gravitate all the way back up to there, and that's exactly what happened, okay? We even get, I didn't notice this, but you notice the more time you've got, you notice these things on the fly sometimes, but we come down, we kind of retest the back end of all of this volume. That's another clue that we're going to push up all the way to that area. And then and why are we doing that? I'm asking myself, why are we doing that? Okay, we'll try again. So that was just dollar Swiss. It's just an alert. I've gotten another pair. It's 7. It's just gone 7 a.m. in the UK. So therefore, the London session has just started, probably getting some volatility from that. Okay, so the question I'm asking myself is, why are we coming back up here? Well, the reason we're coming back up here, given if we just zoom out, there's nothing really of any interest above price, any areas of value until all the way up here. Because of that, the likelihood is that we're coming all the way back up because there are still orders placed just above here. We don't exactly know where. We don't have access to that kind of data, but we're likely coming back up because there's still orders up there that need to be taken out, given that price action is the mid price, the average of the ask and the bid price, orders that need to be filled before that aggressive sell-off can occur. So what happens? We come back up, price comes back up. What happens? It wicks to the area and not through it. Why is that significant? It's significant because on the higher time frames, these significant areas of value, given that we're on the weekly chart, they usually need to be filled with full price action and more often than not broken above before we see the moves to the downside, versus when we just wick to them like that. What usually happens when we wick to an area, such a standout area of value on the higher time frames, is we come back up, break the high and then drop, and that's exactly what happened. Okay, we then have a bit of a sharp pullback there. At this point, we could have been, I would have actually been anticipating at this point, perhaps a sideways consolidation there for a move back up. But again, we didn't really, we did kind of react from the bottom of that running channel, but it doesn't surprise me that we didn't commit to the upside, because, you know, this could have just been a sharp pullback, which pulled back, you know, about 50% of the move before the drop. Okay, so trapping the buyers in a bit too early there, but we would have been looking for, if we just analyze that, yeah, the clue was there. If you look there, we moved up correctively. Okay, the start of the move was corrective, so I'm not surprised when we got this sideways consolidation that it didn't commit, because this piece of price action wasn't direct. It gave us a bit of a clue for the drop off. Okay, so just analyzing all this stuff on the fly. Okay, the other clue was here. Look, you can see price kind of, you know, applying the brakes, as it were. It starts to move down correctively. Okay, that was the clue. So just analyzing some of these things on the fly. So as I said previously, there's a couple of things here, right? So we could have been seeing a reversal structure from here, a bit of a strange one, and one of the clues is that, you know, the trend lines are kind of diverging to get moving closer together. It's not kind of a parallel structure, which we would normally see. Okay, but we could have been seeing a reversal structure to reverse from this sharp move there. However, price didn't respond to that area. It smashed straight through it and it's consolidated underneath. Okay, that to me suggests an impulse correction continuation to push lower, and that this is not a reversal structure. There was another clue actually, which I haven't touched on in my videos, which is also a factor. Usually, if this was an area, okay, so if this sharp move here was a good area for a reversal, you don't usually see this much consolidation sat just above it. You would see more of a, either some kind of reversal structure like that. Okay, just something like that. I'm drawing a textbook example, but just for clarity reasons, you'd see something like that, that kind of volume being built. Okay, or you would just see, you know, just these tighter corrections as the sellers get out of their positions at the last leg. Okay, now if we just analyze this, this could have been, actually, just looking at it, this could have been a reversal structure. Okay, because we did have this. Okay, so there was a possibility of that, and we have this middle section, but there's another clue in there. Okay, so see this middle section. So if this was going to reject from there and this becomes a reversal structure, the middle section doesn't usually have this much volume. Okay, it would usually be, you know, something a bit skinnier like that. Okay, so when it does have that much volume and it breaks out, usually the volume that's been created within here can cause price to move a lot further than it otherwise would have done if the middle section didn't have as much volume. And that's probably why we smashed straight through here. So this middle section within what might have been to some a reversal structure would have been a clue for me, if I'd have been looking at it at the time, that we were likely just smash through and consolidate underneath. So just going into a bit more detail here. And then the clue that we may be pushing lower is the fact that we have a sharp move up, sharp move down, which just so happens to be the retest of the back end of all of this doodling I've done. So let's get that off the chart. The retest of the back of this sharp move. Okay, and then if we just drill down, so just analyzing the picture. Okay, we have the sharp move there. When we have a sharp move like that, and we have a sharp move which pulls back above there, and when we're this far into a move, often this becomes the first drive within a 1, 2, 3, which comes back up to test the sharp move, which is the retest of the back end of that previous low I showed you. And that, at the moment at least, appears to be exactly what's happening. Okay, when we had this, I was anticipating a move up to around this area, followed by a corrective sell-off. and you can see the sections within there. We have the first drive, on the flip side, the second drive, and the third drive, which taps into, it actually near misses this low, I think, but it taps into here. This low broke through the previous high, so I'm not surprised we responded from there. Okay, and then we break out of this middle section. We then come back down. We get a bit of a retest there, and I'm seeing this as potentially, we don't know, this could take a while to form. It may not form at all, but a move up to there to tap into that, which would give us that 1, 2, 3 touch structure. And if that happens, with all of this in mind, everything I've said in mind, what I will be looking for is the same thing that I've been looking for all of this week. Okay, I'll be looking for a tap into the area of value. We don't necessarily need to break above, but I would actually prefer that. Obviously, the more of the liquidity we wash out, the better. Okay, and what this may be, just noticing this on the fly, is this may be a 1, 2, 3 last leg. So maybe this is a 1, 2, 3 last leg to push up to there, which would take us just above there. Okay, maybe we get something like that. Something like that takes us up to there, completes at the area of value, and then maybe we will get what I'm looking for. So a tap into that area, a 1 hour impulse down. Because of how far we are into this run, I'll not be looking for an independent 5-minute flag, and also just because of this strange pullback there, bit of atypical pullback. I'm just factoring all of this in. I'll be looking for a 1 hour impulse down from the area of value, followed by a minimum of a 2-touch 15-minute continuation. So a flag which had 6 to 8 corrective 15-minute candles. So what I would do is I'd wait for the 1 hour impulse down, and then as soon as on the 1 hour chart we had so that would be obviously a red bearish move down. Once we had one green corrective 1 hour candle, that would be in my rules, that gives me permission to drop down to the 15-minute chart to look for a 15-minute structure, and then I would look to get short on the break. I would set the order on the break, and then I would be looking for price to come back up to tap the high. If it did and it rejected from there, I would place an order within the flag. Okay, and I would cancel the original order, and if it didn't tap the first high, then I would just let the original order trigger me in. So how many traders do you think out there have a game plan like I have? Okay, I'm not the greatest trader in the world. I'm still learning. There's people within our community that are doing much better than I am, but I have a plan. Okay, most traders don't have a plan, and if they do have a plan, they don't actually stick to it, and then they blame the market. They say it's manipulated, the banks are hunting them, etc. Most of these people are hunting themselves in a variety of different ways. Okay, and if we get this entry, I would be able to manage it down to the low of the structure, just in case we responded from there for something in the region of 5.5, 6%. And if that kept going, which it would likely do, because if we just measure the range, okay, we measure this where price started impulsing, and usually the leg out of the correction is of a similar length. Look at that, okay? It's exactly the same length as the impulse would be if we were to respond from there and get that impulse correction continuation. And then I would use the Fibonacci retracement tool, and I would measure from range to range, which would be there. I would set a take profit at that 90% area, which is where price tends to pull back sharply, even if it continues in the forecasted direction. And I would also trail my stop loss simultaneously. So that is Sugar USD, one of the cleanest looking setups that I've seen in a while. But one thing I've learned about trading is that you can have the cleanest setup in the world, and literally within one candle, the whole thing can be invalidated. And a lot of people take that personally, because they always think that the market's against them. I don't think the market's against me. If my setups get invalidated in one candle, I don't care. I just go and do something else, okay, or wait for the next setup to present itself. And that is how you approach trading in a professional business-like manner, and you trade in alignment with the money flow, and you don't try and smash the banks as many people are trying to do, which always makes me laugh. But anyway, have a great day, folks. I hope you've enjoyed this video. I hope it has provided you with as much value as possible, and I will see you again in the next one, which will likely be made this time tomorrow morning. Have a great rest of your day.